Hey everybody, happy new year. Let's head into 2025 and continue to improve ourselves and our trading and make profit along the way. We're going to look at a lot of things here. We're going to start really zoomed out on annual charts and we're going to zoom in from there. This is definitely a longer term time frame focus as we close out 2024. So we'll start it with the broader market, the S&P 500, Nasdaq. We'll look at Bitcoin and then a bunch of individual names. Essentially, a lot of the longer term patterns that I'm watching. And again, just, we've been tracking these longer term patterns generally in a video once a month, but just looking back at some of the really good ones along the way before we get to the new ones, we had that CCJ monthly equilibrium that we were watching. It broke bull, beautiful follow through. Costco, another one, monthly equilibrium broke bull, tons of follow through. We were watching Jets, the airliners, 3-month equilibrium. That broke bull with a bunch of follow through. Tesla was a 3-month equilibrium, bull break to all-time highs. I think that's all I've got off the top of my head. There were definitely more, but those were the ones that stand out. And again, longer-term patterns definitely have their value. And the longer term a pattern is playing out, the more follow-through we anticipate. So SPY on the annual chart, we've got extremely strong close. Absolutely no red flags for the bulls whatsoever. I always want to find a time frame where I can say this has been the case for a prolonged period of time, and then I look for a sign when that has changed. For me, that's the 6-month chart on SPY. We can say SPY has been holding 6-month EMA 12 support on every major correction since the 2008 bottom. We held it back in 2011. We held it on the CVID dump. We held it on the 2022 bear market. So when we lose that level, I will say we likely have seen a top set for multiple years of consolidation. That said, with where we stand right now, even just to get to that level would be a 27% drop. So if we're going to lose it, in my opinion, we would likely need to see another couple of 6-month candles, have that EMA 12 keep catching up to price. It's not in the picture right now, but I'm planning ahead. Maybe that's going to matter in 3 years. I don't know. But I know that that's a time frame that I'm watching. Zoom on down to the monthly chart. A little bit of a pullback this month. We know we're watching our tightening range on the FOMC reaction. If that sucker punch low breaks, that will definitely be meaningful. The weekly is losing EMA 12 for the first time in a few months. And again, if that sucker punch low breaks, we will be setting up the possibility of a head and shoulders type of pattern on the weekly chart whenever we bounce next. But for now, I'm still on the daily chart. Watching to see how this FOMC reaction low plays out. Nasdaq, not much to change. Annual chart, all bulls, 6-month time frame, has been holding. You can change it to log or not, depending on your preferences. I generally don't have log on. Sometimes if it's an exponential chart, I will pull it up. But again, same deal with 6-month EMA 12, and everything else is the same, essentially, of what I just said with the S&P 500. Bitcoin, annual chart, extremely strong. No red flags, new higher low into continuation, new all-time highs. Go to the monthly chart. It's definitely a bearish monthly candle. Let's switch here, take log off. So that's a bearish monthly candle. We may be starting monthly consolidation. We could see monthly EMA 12 was key during our period of 6-7 months of consolidation back then. So I'll be watching that. And, maybe we need to back test. Bulls certainly don't want to see this much of a pullback, but if we do need to back test previous resistance, now support, monthly EMA 12 is going to be aligning with that over the next couple of months. But zooming in, we know the weekly is still extremely strong. And if we were going to see monthly consolidation with any significant follow through, it would likely be confirming a weekly downtrend that would have that happen. So for now, I'm watching for a weekly higher low. It's not set yet, but weekly bull flag is still on the table. Just aware that, again, monthly consolidation can happen at any point. It shouldn't surprise us. It should be a part of our game plans, considering we just went 120% since last monthly consolidation. We have to remember that, 5 years ago, 120% was nothing for Bitcoin. It's a different asset at this point. 120% is a lot when you have this size market cap and liquidity and dollar volume trading through it day in and day out. All right, so now some patterns that we're watching. First, we're going to look at the longer term tightening patterns. Then we're going to look at some potential longer term bearish patterns because we know we've been in a bull market. So I want to be keeping an eye out for names that have relative weakness or things like that. but we'll start it off here with ANF. So ANF, this is a weekly equilibrium. The context is this 3-month chart has gone straight up to the tune of thousands of percent. So I'm watching for potential 3-month consolidation. Anything that's gone stair step on the 3-month time frame for that large a move, I'm looking for a pullback. We will look for a 3-month higher low, but we're tightening up. So weekly time frame, I've already made a bearish entry here. And my thought process was, can this pattern break bull? Absolutely. But my thought process is the majority of my IRA is long. I've been bullish for over a year and a half at this point, and I want a little bear exposure. And so I just saw a spot where I could, play off resistance, make a short entry, didn't take profit because my position size isn't too meaningful, but we are just tightening up and volatility is coming here. If not in January, certainly in February, just because you can't get much tighter than this on the weekly. And we're just viewing this like this. We did just set another lower high. Anything above 133.81 is a higher low. And I'll stop out if we make this bull break because we are riding monthly EMA 12 support. And there's no red flags as long as that's holding. But just giving it a low risk shot. And we'll let that play out. But we know that volatility is coming when that break takes place. Oil volatility is coming. Here's the annual chart. Multiple inside bars on the annual chart. When's the last time oil has seen multiple annual inside bars? And you could say back here is when it was, and it wasn't exact, but as close as you can get. And then the next 2 years saw significant volatility. So just as an example, the second inside bar here had a range of 16%. When we broke, we had double that range almost the next year. And we went from, 2 years where the total range was 20% into 2 years where the total range was 47%. So we just had a year where the total range was 23%. So I'm looking for a range in oil of, 30, 40% plus potentially this year. And zooming in, let's go to the 3-month time frame. And let's go 2-month. I always just play around, what stands out more clear to me. But I'm viewing this as the big move up, higher low, lower high, higher low, lower high, trying for another higher low. And it's entirely possible, again, this is a 2-month chart. We could bounce a little bit. We could stay within this pattern for another 3-4 months. But we're going to break before the year end, in my opinion. And we're going to look for a significant amount of follow through. And so keeping an eye on this tightening range. I do have some long energy sector exposure with some relative strength recently. It's just a short-term trade at this point. I will try and leave a runner for a longer-term move. But if I'm going to let that runner play out, I've got to see oil break bull from this tightening range. If it breaks bear, I'll be very quick to stop out of the energy sector if I haven't already stopped out at that point. BA. So we know Jets broke its 3-month equilibrium bullish, but BA is still tightening up since COVID, where we've got our big drop, big bounce, higher low, lower high. We're trying for another higher low, anything above 113. Again, another pattern where if we do set that higher low, it's entirely possible we go another 6-9 months within this pattern. You can just anticipate, okay, every candle's 3 months. Well, what if we bounce for a candle or two, and then we pull back for a candle? Next thing you know, that's 9 months, and we're still within this pattern. So that's a possibility to be keeping an eye out for. But again, we always want to anticipate, okay, what's the most likely scenario? If we're going to set a higher low, how would that form? We zoom in and try and find a bullish pattern. So we just saw a big move on the weekly. If the bulls confirm a weekly uptrend, probabilities of a 3-month higher low being set will increase a good bit. And then eventually we'll scout a lower high compared to 267, keeping in mind there's still a lot of range here, especially for BA. BA can go up 35%, 40% from where we stand and still be within this tightening range. So keeping that in mind. But again, another nice long-term tightening equilibrium. Starbucks is the 4-month chart. So bounce from COVID lows, higher low, lower high, higher low. We're scouting a lower high. Again, can easily stay 8 months within this pattern. But when it breaks, it's going to be very significant for the long-term structure of this chart. And let's go to the annual chart. We're just bouncing off monthly EMA 12. So, okay, if we're going to set a 4-month lower high, what would it look like? Let's go into the weekly. We haven't confirmed a weekly downtrend yet. This is a big drop. Potentially some news in play with union and strikes and things like that. I'm not really paying attention, but we've got, if we confirm the weekly downtrend, probabilities of a longer term lower high will increase a good bit. And then we'll be watching the key support down at 70. Long-term, multi-year patterns. This pattern's been forming for essentially 4 years, if not more, depending on where you want to say the start was from. Other than that, PEP. Look at PEP here. So there's a change in the long-term structure of this chart. This is the 3-month chart. We have been holding 3-month EMA 12 support for 16 years. Every single pullback has held this. COVID held it. 2022 held it. And here we are closing below it for the first time in 16 years. That needs to be a flashing red light that something is changing on the longer term structure of this chart. We also, when's the last time we confirmed a 3-month downtrend on this chart? It hasn't, this was a little dinky pivot, but you could say 2008 was the last time it's happened. So we're now looking at something that has not happened in 16 years on the verge of happening. If we break 149.85, the 3-month downtrend is confirmed. When you see longer term changes in structure like this, there's a fundamental reason for it generally. And this is where fundamental and technicals go hand in hand. And so you could say, okay, PepsiCo, RFK Jr., if he comes in and changes, a bunch of these requirements for their food products, because we know PepsiCo owns 1 billion different companies, that is some of the fear that the market is seeing right now. And so if this 3-month downtrend confirms, here's the annual chart, we look for yearly consolidation, and we will look for a yearly higher low. This is a dividend play, but it looks like, you show me this chart, what's the probability that yearly consolidation is going to happen here? I'd say 85%, more than that, 90%, just because we're right there. And so if we break that 149 level, annual consolidation is underway, and we'll look for, again, a higher low off annual EMA 12 potentially eventually, but this is a longer term chart that is topping, and we're seeing that topping process playing out with the trend change confirming. You don't usually top, again, unless there's some kind of crazy headline, you don't usually top on just a straight drop that catches everybody by surprise. The major tops are just your standard downtrends that are showing distribution, and they're a bit slower forming. I mean, you look at the Nasdaq weekly chart in our 2022 bear market, there's no massive straight drop. This is a bull flag attempt that fails, and then we confirmed the first weekly downtrend. I mean, that was QQQ's first confirmed weekly downtrend since the COVID lows. So over a year with no weekly confirmed downtrend, and the first time you get it leads to a year-long bear market, and then just standard downtrend from there. So it looks like PepsiCo is doing that on a long-term time frame. Healthcare. This is the most bearish annual candle that has formed in the healthcare sector since 2008. So that is, again, 16 years. It's almost a 16-year stair-step pattern. We had the COVID lower wick that was obviously instantly bought up, but this is a move of 864% over 15 years. So what's that? We're averaging 55% a year with the most bearish annual candle. Annual consolidation is coming in the healthcare sector sooner rather than later, in my opinion. Now, again, we want to zoom in. Okay, thesis. Annual consolidation after a bearish candle. We need to see a bear break of 133.84. That's only 3% away from where we stand. We zoom in. Is there a bearish pattern forming? Well, okay, I'm watching previous. So again, this is the level where if we break it, annual consolidation's underway. We'll call it $4 to the downside. But we've got previous resistance where we struggled, broke out, back test and hold, continuation, and we're back testing it again. If this pattern is going to come to me exactly as I want to see it, it would be a monthly bounce for a monthly head and shoulders. If we just straight drop, okay, monthly consolidation is underway. We still have to confirm the monthly downtrend if that's going to follow through. I'd rather see a bounce for a monthly lower high, and then that's the head and shoulders. I talked about this a bit in prior videos. So I'm watching for that. We'll see if the trade comes to me. Am I shorting the healthcare sector now? No. If we bounce on the monthly and we set a monthly lower high, absolutely, it's on my radar. Last one is Meta. So Meta 3-month time frame. Again, percentage matters to me in the sense that, okay, a massive company has run 627% since our last 3-month consolidation. That's a massive amount. That's unsustainable. We're going to see 3-month consolidation sooner rather than later. Again, same thing. This is the most, it's not, it is a bearish candle at the top of an uptrend, spinning top, whatever you want to call it. It's not an extremely bearish candle, but we could say it's the most bearish candle during this entire bounce. You can see there's not upper wicks, not any meaningful upper wicks on this move up. So again, zoom in. What would it look like if that's going to lead us to 3-month consolidation? Well, I can see that we had bull break, straight in consolidation, bull break, straight in consolidation, bull break, straight in consolidation. What does that mean? It means I'm scouting a rising wedge. So I draw my resistance line. Where do I draw my support anchor from? I don't really like that. We'll go more recent. Could draw something like that. I do want to get the more recent action in there as well. This little higher low, tighten it up. Again, these are just visual guides. I could play around with them a bit. Either way, I know that I'm watching for the potential of a rising wedge pattern. Rising wedges can often turn into head and shoulders as well. What would that look like? Well, our last higher low was 548. We can drop another 5, 6, 7% and still be holding a weekly uptrend. What I want to see, if this is an ideal pattern, is a head and shoulders. I want to see a pullback to hold the uptrend support as well as the previous price support, and then I scout the weekly lower high to see if we roll over in a weekly head and shoulders to get that 3-month consolidation underway. So again, do I have high conviction in these bear patterns? Not at the moment, but again, I'm laying out the trade game plan saying, if this sets up exactly as I want it to, then the trade came to me and I'm going to take it. I'm going to make an attempt at it. And so now I know exactly what I want to be looking for. If it doesn't happen, whatever, I move on and look for something else. There's 1,000 things to trade. And if it does come to me, then I know and I'll be ready for it with a predetermined rough game plan. I don't know what level I'm going to buy at, a short at, or any of that, but I just know roughly what I'm looking for. And then if it happens, then I zoom in and get the exact details. All right, I hope you have a great 2025. Establish a healthy routine in your trading as well as outside of your trading to prove discipline to yourself, healthy eating habits, healthy exercise habits, discipline. Let's get it.